Before we move on to the last few chapters of the step-by-step guide, let's do a quick recap. All we've done in the last few chapters is the following. First, we opened an account with an online stockbroker. Then, we figured out which investing accounts we want to invest in, depending on our circumstances and the country we're in. We then talked about the difference between lump sum investing and dollar cost averaging, and figured out that dollar cost averaging is the best way to invest for beginners like us. It reduces the fear of investing and ensures we don't make a reactive decision to sell our investments if the stock market starts going down. After that, we figured out how much money we want to invest this year. We split that money across the different accounts we opened. Then we set up a recurring schedule to transfer money from our checking account into each of our investment accounts. We are making it recurring because we're building an automatic investing system. Making it recurring allows us to do that, and I'll elaborate more on this in the next few chapters.